Corporate finance practice problem using Excel. Retained earnings and dividend limits. Get ready, it's time to take our chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet and would like to follow along, note that we're in the practice tab as opposed to the example tab. The example tab in essence being an answer key. Information on the left-hand side, we're going to use that to populate into the blue area on the right-hand side, looking at the calculation for the dividend limits, how many dividends could be paid out, a practical limit, what's the practical amount of the limitation of dividends that can be paid out, and then the payout ratio using the practical limit. Information on the left says we have the stockholders' equity at the 162,000, and then the common stock 64,000. The retained earnings will figure the retained earnings. That'll be our first calculation. Total assets at the 405,000. Cash, we're going to say, is 12% of it. And then the earnings included in the retained earnings, so the earnings for the year, in essence, net income, being the 26,000. Now, this part up top, you can kind of imagine that. You should be able to imagine that as basically the last component of the balance sheet. Balance sheet being the accounting equation, assets equal liabilities plus equity, which could be reformatted as assets minus liabilities equals equity. Equity then representing the owners, in this case, stockholders' claim to the assets of the company. The equity section then can be further broken out into basically the investments of the owner, which would be similar in a sole proprietorship or partnership to the owners basically putting money into the company, and then the earnings that have been retained, which have not yet been paid out. So notice this is a little bit different, and this is where the equity section is different than other kind of business entities. In other words, if you had a partnership, you would have to track the basic amount of investments basically the equity section per partner, because the amount of money going in and being taken out and the earnings sharings can differ for a partnership. In a corporation, remember, part of the benefit of the corporation is the fact that we have this uniform units of stock, and part of that uniform units of stock means we can organize the equity section a little bit differently. We're not going to organize it by owner as we would in a partnership, but rather by ownership type, since we broke those out into basically really even kind of chunks, which are the shares. So the stockholders' equity then represents the total amount in the equity section, and we can think about that as similar for a partnership or a sole proprietorship, meaning assets minus liabilities would be, total equity in the equity section. Then we're going to break that out then by the common stock. The common stock represents the amount of money that the owners basically put in. How did they put it in? From buying the stock. Now remember, this is the stock that was purchased by the shareholders from the company themselves. People are going to be buying and selling stocks on the market amongst themselves, but the issuance from the corporation out into the market and the cash they received from the issuance of the stock can be thought of as basically investments coming from basically the owners. And we're going to put those as amount, separating them out from the earnings of the company. So we got the common stock. You might also have an amount in excess of par amount as well, which we'll talk about in a future presentation. But in essence, the amount that was paid for the shares is kind of similar to an investment if you're talking about a sole proprietorship or partnership. And then we've got the earnings, retained earnings part of the balance sheet. That represents the earnings that have been accumulated over time, which have not yet been paid out. So it's still a claim to the owners of the company, the stockholders, but this represents earnings that have accumulated that didn't get paid out in dividends, whereas the common stock represents kind of the investment from the owners in the form of the paying of the corporation for the stock that was purchased. So keeping that in mind, then we think, well, what is the upper limit that we can basically give dividends for? And you can't give dividends past basically what is in retained earnings, because the retained earnings is kind of the limit of the definition of retained earnings is basically the earnings that have been accumulated that you have not yet paid out. If you go over retained earnings and start paying out the common stock, then you're basically paying out the initial investment. You're not paying out the income, the earnings of the company, and that could be treated differently, especially for tax purposes. So that's kind of like your limit generally. So let's calculate the retained earnings. We're going to say is the total stockholders' equity minus the common stock. This is what we imagine are components of the equity section. And then we can think about the dividend limits, the dividend limit, which of course is kind of like the same calculation, right? We'd have the stockholders' equity at the 162,000. We have the common stock, if that's our common stock, at the 64, and underlining that, and that would give us our retained earnings, which we're going to call here our dividend limit. Dividend limit. So the dividend limit is generally the retained earnings. That's how much we can basically pay out. Now, obviously, in practical standings, we can't usually pay out the retained earnings because we don't have all of our money in, all of that value is not in cash. This equity section represents our ownership claim to the assets. The assets are all valued in dollars because they're on the balance sheet in terms of money, but we don't actually have the cash usually to pay out the full amount of what is in equity because we have it invested in other types of assets. So although this is kind of the limit from a legal standpoint, because we would have to treat this differently if we were to basically distribute something that came out of common stock or distribute something more than what's in retained earnings, there's more of a practical limit, which is basically how much cash do we have. So the practical limit might be just what's the cash balance, right? Cash balance. And that's going to be equal to the 405,000 times the 12% in our case. Well, we're going to say that there's 48,600. So we're not going to be able to pay out generally more than the 48.6 unless we do something different with regards to the dividends, distributing something other than cash on the distribution. So we're talking about cash dividends. It's going to be limited to the kind of the cash. Now, if we were to assume that we're going to pay out the 48,600, we can calculate the payout ratio. So let's assume that we're going to pay out in the form of dividends 48,600. Then we could say, all right, let's assume that the dividends are going to be this 48.6, and then the earnings, comparing that then to the earnings, and the earnings we have at the 26 here. Let's call it earnings. EARNs. Earnings are going to be the 26. Underlining that, we're going to go to the font group and underline. That's going to give us, I'll just call the total down here, which is going to be out. Let's just call it payout ratio. Payout ratio, which is going to be equal to then the dividend over the earnings. And I'm going to say number group, percentify that. There we have it. Let's add a couple decimals here. Numbers, add a couple decimals. Now, this number might seem kind of funny to you. You say, hey, how can it be, 186,000? How is it we paid more than of the amount of the earnings that we had? Because we only had earnings, we're saying, of the 26,000, and we're saying we're going to pay out dividends of the 48.6. In other words, you might say, isn't there a limit to the dividends that you can pay in a year to the earnings that you had in a year? Because we saw some calculations before with the basically the payout ratio generally being something that you would think between 0 and 100%. How can the payout ratio be more than the earnings? And note that it's possible then, in other words, there's not a limit on the amount of dividends that you can pay to the current earnings per se, although most of the time, generally, corporations are going to want to pay some percentage of the current earnings. But that's not the limit that you're restricted to generally, because you could dip into the earnings that you have earned in the past, which you had not yet paid out in the form of dividends. So if you had basically good years in the past where you've reinvested the money, and then in the current year you had the same year or a lesser year, and you still wanted to pay out the dividends that you had been accumulating in the past, then you could still pay those, because note that we had the retained earnings calculated at the 98,000. So we have enough in retained earnings to pay out. That's not just current earnings. However, again, we have the practical limitation, which really is the cash, the amount of cash we have. The limit of the earnings is not really the practical limit in terms of what we could actually do, but it's probably a kind of a normal type of situation where they would basically want to have some percentage of the current earnings, which is common. Type of situation. So once again, 3 limits we're looking at. 1, what's kind of like the legal limit, the retained earnings, which includes all the earnings over the lifetime of the company that we have not yet paid out in the form of dividends, not dipping into total equity, not dipping into the common stock. What's the practical limit? The cash that we have, if we're talking about cash dividends. And then oftentimes the company will try to limit it further by basically looking at some percentage of the current year earnings, although in unusual situations, they're not limited to the current year earnings and they could, deviate from that limitation as well.